This is Eric Mwatha with Mwatha.com on the 6th trading session of September 2011, which is September the 9th, 2011. We see the Dow down about 2.6%. The S&P 500 also closed down about 2.6%, and the Nasdaq about 2.4%. This is mainly attributed to the fact that Europe was also down between 2.3% and 4% on most of the markets. Now, I would like to for you guys to pay attention to the close of the French market, which was down exactly 0.36 going out this Friday. Now, first and foremost, I would like to go ahead and see. Let's take a look at the chart here, the daily chart. And what we see here is the French market, and this is a 1-year daily, ended the day about exactly 3.6%, closing at the lows going back about 2.5 years. This is a fresh daily closing low. But what I wanted to sensitize you to is the nature of the close here, because I looked at the numbers and I thought they were really interesting. Now, let's play around with the numbers here. If you take the close here, which is 3.6, and if you've watched my video, and I'll show you the prior video that I have on YouTube, but this 3.6 is an interesting number. Now remember, like I said, I began the video by saying we are after the 6th trading session, which is today of this month. You see these numbers here. We close at, on the French market, minus 3.6%. Now if you add this 1 plus 1 plus 1, get a 3 on the amount change, and then 2 plus 4, you get a 6. So not only do you get negative 0.36 close, if you play around with the numbers here, they add to again what looks like a 3.6 close again. So which 3 times 6 is 18 again, so you get 18, which is 6 times 3. Or again, if you want to look at it the way I look at it, it's just a play on number. This 3.6 or 3 6s. So in other words, you get your play on your 3 6s right here. Now you'll see this a lot, for example, and if you want to see examples of this, just all you need to do is check out my video on YouTube. My video on YouTube called Occult Stock Market Codes. Here I do visit some of the codes that the market manipulators use routinely, if not daily, on the stock market. Now you might say the prior chart was just nothing but a coincidence, and that might be true. Now remember, we're in the month of September, and like I said, we had Monday off, so this was a 6th trading session, and you might need to watch that this video here to see that the market started going down on the 6th trading session of May 2011. But watch the video to see why 6 is in play, has been in play a lot in this market. So now, after the 6th trading session in Europe, they fell down. After that, they just collapsed, closing at new daily lows today. Now, what I wanted to point out here is, I've already talked about this. Is again the French market, French concurrent. The close here is weird, but what was really interesting, so I can confirm to you that there is some manipulation that goes on in the stock market, because you don't want to tell me that nobody came in the last minute, a big institution or just a buyer who moved the market a few pennies off, so that it could close at 3.58% or 3.61. So this close here. But what is really interesting is, now if you take and add the closing price of the French market, if you add 29.74.59, if you add all these numbers, 2 plus 9 plus 7 plus 4 plus 5 plus 9, you end up with 36. I call it manipulation. I don't know what you call it. Let's move on here. Alright, so now let's go to the analysis part of this video. Now you'll notice that the Dow was down surprisingly, even though the week seemed like it was a nice up week for the bulls, still down for the week 2%. The Nasdaq was down about 0.5%, not bad, but still negative close. And the S&P 500 was down about 1.68% for the week. And notice we've been unable to, and this is a S&P 500 3-year weekly chart, we've been unable to move above this red line here, as we've talked about over the last week or so, if not longer. So, and then again, notice that we can't seem to move above this declining 10-week moving average or the S&P 500 weekly. So net, even though markets are going to have rally modes here and there, I think net the market still, like I've been saying for many weeks, still remains bearish. In fact, the extent of the bearish environment is kind of one of those things nobody wants to talk about, but I guarantee you it's more negative than you think. Those excuse me, those charts don't look good, and if everything I see comes to fruition, you're gonna have another 2008 September market environment. Now let's take a look at the XLF, and this is the XLF 18 months daily chart. Now you'll notice this is a clearly defined area of support and resistance. This line here shows where this market found support last summer and then in September, and this is where we can't seem to ever since we moved below this level here, we've bounced and hit this level on multiple days, can't seem to move above that, and now we are just here, not too far from fresh 52-week closing lows. Let's take a look at the RSI here. You'll notice that now the RSI is showing that it is now starting to crack, with an additional crack of this line here, the red line. Now it's trading on south side of that line, so which means we could actually even be pushing lower here in the coming days. Again, it needs to defend this area, otherwise, like I've been saying even in last week's video, we are going to be testing August lows. I think I said that too many times last weekend, and that seems to be the case so far. Now if you take a look at the XLF, now we have the month of August, and this is an XLF three-year weekly chart. The month of August this year, we close at 12.13. So it needs to defend this price here on a weekly closing basis, otherwise this market is going to be pushing much lower. It either defends 12.13 or it cascades even lower. So this is where you want to go short. Anything below this, you want to go short. 12.13 means it's breaking down, and I saw some stocks doing that. Morgan Stanley did that today, JP Morgan did that today, General Electric did that today. So some stocks are already doing this, breaking down below this weekly lows, closing lows of August. So here's another example. So below 12.13, you want to be a seller of the financial space. Now the QQQ. Now you'll notice here, number one, we've been unable over the last week and a half to move above the 50-day moving average. So, and we've talked about that. This yellow area is where we would expect to find support or the beginning of a new rally once it captures that level. But as you can see, we ended the week back below the yellow shaded area. So like I've been saying for a while now, we are looking set to test August lows. This tells me we are going to test this August lows. Now if you take a look at the QQQ from a daily chart, you'll see that once the market was rallying, I think on Tuesday or Wednesday, all it did was, if you take the RSI and take the highs of July and then the highs of late July again, draw a straight line. We hit this line, this level, twice in the last week and a half. So we formed a double top right there, and that's the reason why some, about late afternoon Wednesday, I made a video, and I pretty much was telling my followers that this market is about to turn and head lower, because I could see that all the market was doing was exactly hit that level and would back off, and that's exactly what happened. Again, now we see a break of this red line here, this line here that is drawn there, And as we break that line, to me, that tells me that we are going to take out August 2011 lows. Now if you take a look again, this is just an hourly chart for the QQQ. Is while the market was trying to rally this week, you'll notice that on the hourly, draw a straight line connecting the highs of July and the highs of beginning of September on the hourly chart. When the market was up this week, it hit that level and could not move above that level, and so it just made sense that we pulled back, hence today's big point drop. Also on the RSI, you'll notice that once we could not hold above this red line over there, anybody who was watching that could have seen this sell-off today coming.